And we are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go through these markets one step at a time, top-down analysis style, looking at the indexes, the sectors, commodities, individual companies, anything grabbing our attention we think is important, interesting, and enough to bring to the show. Break it all down, analyze it for you so you guys out there can run your daily routine as a trader with more information. Welcome back to our show, and for our community, hashtag Team Tackle right in the chat. Let's get the action going and all that conversation going in the chat. Appreciate that each and every day. If you are brand new to our channel, welcome to Tackle Trading. We do this kind of content live on a daily basis whenever the markets are live, 12:30 p.m. Eastern Standard Time. Click that subscribe, click the bell, come back and join us and be a part of our community. Let's bring the coaches in here today and start breaking down these markets on a Monday as we're starting the week. Big event for the week will be the FOMC meeting with their policy statement to come around noon on Wednesday. We'll talk a little bit about that in preview. We'll talk more about it later in the week when it's actually happening as well. We're going to look at the sectors today with Coach Gino. Coach Mark has Commodity Corner. We're going to look at gold a little bit later in the show. Mark, how are you doing today, sir?
I'm doing great. I could go on about me doing great, but I'm doing great.
Well, that is great. I'm glad to hear that. And
it is great, isn't it?
The weather's nice and there's all kinds of opportunities, and it's a like you like to say, cash flow environment, right?
I mean, you give me a cash flow environment and warm spring nights to sit on my porch and drink. That's nirvana for me.
There you go. Maddie, how you doing on a Monday morning, sir?
Tim, I'm doing absolutely fantastic as well. I don't think I'm doing as well as Mark. That might have been the happiest I've ever heard him. So in my scale, I am definitely not doing. I'm doing better than gold because I didn't violate a trend line today. But I am not doing as good as Mark. Wow, that was pleasant treat galore there, buddy. And you are not doing
as good as Bitcoin miners, which may have something to do with my mood as well.
Oh, I see. You're happy with your mining positions. I understand that. But mostly I think it's the warm spring nights. Bitcoin did pick itself up off the lows a little bit. I think it's far from out of the woods, by the way, but we'll take a look at that. We'll have a convo about it, I'm sure. Yeah. Maddie, how are you? Let's bring you in here next. How you doing, sir?
Doing great.
You already gave those pleasantries.
You already did me. Now it's Gino, bro.
Now I'm thinking about those Bitcoin charts. I actually want to get down to it, take a look at it.
Just get into the miners here.
Let's talk about Bitcoin. Gino, what about you, bud? How you doing today, sir?
I have to go twice. What's up with that? Yeah.
Right into the skin. I love it.
It's Monday morning. I'll give you that one, man. I'm doing good. And just looking forward to this week. The FOMC meeting on Wednesday. If you guys haven't done it, check out the newsletter. A lot going on. So let's jump into it.
Yeah, let's break it right down. Let's get down to business. Obviously, it's been a kind of tight range market here for quite some time, Matt. The S&P 500, which is the benchmark index, includes all the different sectors, balanced representation. It's hanging out right near the all-time highs, and it's been hanging out right near the all-time highs for a couple of weeks here. How are you interpreting price action to start the week, Matt?
It's been a fascinating last couple of days in the market from a headline perspective, right? You wake up in the morning and what's that first headline you read? The last three trading days.
Markets
all-time high, right? Market hit an all-time high. You're like, not all-time highs are created equal, apparently. But it's again just part of the lull the market has been going on, and it feels like the market's a little bit asleep right now. It's the lull of the summer. We're all getting back out there a little bit, so it's understandable. But at this point, it's like, all right, we're riding the 9. We're horizontal on the resistance. You can't get a lot more riding the 9 and horizontal than that. That's about as tight as you can get.
This chart almost last night got me to go back over the last 20 years to see if this is the most pathetic riding of the 9 I've ever seen.
It rivals it.
Like, I seriously, it's like, because and this is the trader part. I mean, I love research and I love this stuff. Yeah. And when I see these things, I'm like, give me some historical comparisons. I can't remember one that's lasted almost 20 trading sessions with this little price movement with the 9 still holding.
It started riding the 9 here. That literally was about 12 sessions ago, right? Mm-hmm. So we're talking close to about 3 weeks now that you've been riding the 9, and you've seen price appreciation that is a total of about 1%.
Well, we usually call riding the 9.
That's fascinating. Yeah,
It
you're
is
riding
fascinating
the
to me.
lightning.
We
You're
usually
riding
say,
the lightning.
is this not riding the lightning? I
This
mean,
is not
No,
lightning.
no, this is the lightning hit you and you just kind of fell over.
Uh-huh.
That's what this is.
This is riding the front porch light that is kind of blinking, and you need to replace the bulb.
Yes, yes. Hence why Mark is sitting in his rocking chair these days. But no, it is just riding the nine a little bit. And yeah, Mark, you said, isn't this the most pathetic riding the nine? And again, cup is it half full, half empty here? You still gotta like the defensive nature of the market, though, right? The market isn't driving anywhere right now. There's no doubt about that. It does feel asleep at the wheel a little bit, taking a little bit of a break, but it's getting to the point where it's like, okay, we got to move somewhere because you can't continue to ride the nine and tighten up this resistance level further. I expect some price movement, and obviously I think at this point a lot of traders, myself included, is kind of staring at the barrel down, coming down on Wednesday with the Fed and what the Fed is going to say regarding the inflationary conversation.
Yeah, and we'll be talking about that obviously throughout the week. The Fed is not expected to change monetary policy. I don't think anybody in the market expects an interest rate change. It really is just going to be about the commentary about tapering, about the expansion, maybe potentially about inflation if they're going to say anything different. Matt,
They better say something about inflation.
I think
inflation
so as well.
Inflation data has been extremely compelling over the course of the last 6 weeks since the last time the Fed has met. We've seen some fairly aggressive increases in inflationary reports, both in the PPI report as well as the CPI report. If you guys remember, just a couple weeks ago, the CPI report came in north of 5. We've seen inflationary data around the world start to go up and up and up. We're also starting to see corporations literally come out and make announcements, guys. And this is, we talked about it last week, but I don't think we really talked about the importance of the corporations in this inflationary conversation. In history, corporations typically do not come out and address inflationary pricing concerns publicly. They usually do that behind the scenes. But we are seeing corporation after corporation come out and discuss passing on increases in cost to the consumer, talk about sample sizing and the reduction in sizing in containers. And yes, they've also expressed the concern of, could this be transitory due to supply side concerns? Yes, it could, but it also could be something else. Paul Tudor Jones today talked about how this could be the most important Fed announcement in Jay Powell's career. Now, I am not there because I don't think, like anybody else thinks in the market, that they're going to do anything. And so I wouldn't exactly call it a very important meeting, given the fact that nobody expects Jay Powell to change anything in the policy. Paul Tudor Jones is probably talking his book more than anything there, but I would say I am interested in it simply to see if the language of inflation has changed at all. This to me is not about policy shifts, because I don't expect them to do any policy shift, not in terms of quantitative easing, not in terms of the interest rate. But does he talk about the transitory language of inflation and how that could impact things like the dot plot and the anticipatory interest rate increases that were not expected, if you guys remember, that were not expected until 2023? Has he came off that? Has the inflationary data over the course of the last 6 weeks and over the course of collectively the last 6 months, has that inflationary data impacted the analysis to the degree that they would shift that dot plot and anticipate interest rates going up, maybe say in 2022, which would be a little bit quicker than the 2023 projection that we all got 6 months ago? Those are important conversations, but not in my mind would I put it into the, oh my goodness, this is one of the most important Fed announcements of all time. I just think it's important in the sense of the transitory language and how that could impact the anticipation of interest rate increases in 2023, or hypothetically, if we start to see more concern coming out of the Fed from an inflationary perspective, could that impact that coming into 2022? Those are subtle but very important distinctions. But again, that does not rise to the level of, oh my goodness, most important meeting of all time status.
No, I don't think it's the most important meeting of all time either. I do want some clarity for the marketplace. I got to tell you, as an investor, I'm looking for a little bit more information as to what their plan is, Matt. I think most people are. I'd love to hear it. I'd love to hear, are we talking 2022? Are we talking potentially about tapering some of those mortgage-backed security purchases later in the fall? I think the entire market's kind of waiting on some of that information as well.
And again, important data. No doubt about that. Important, relevant, obviously data. Everybody, including us, is going to be covering on Wednesday and the post-analysis Thursday and Friday. But again, the anticipation coming into that, the buildup is a little bit more than it needs to be.
Absolutely. Let's take a look at the rest of the markets here in just one moment. I want to get Coach Gino's thoughts on broad market conditions before we dive too far into the technicals, though. Gino, come back in here for 1 second if you can, unless you went to get a coffee. I never know what Gino.
Oh, I'm here, man.
There you are. I know your morning.
I went to get a coffee.
It's like ritual, bro. I mean, you make award-winning coffee, so it would not shock me if you did. But what's your read on the broad market here? What are you looking for from the Fed a little bit later in the week as well? What's your read on market conditions as we start the week?
Yeah, like Matt said, it's an outlook of the FOMC meeting. I put in the newsletter based on the CME rate watch. There's a 96% chance they're not going to raise interest rates for the rest of this year, all the way out to December. But I woke up this morning, they changed it to 93%. What that little 3% change, I don't know what did it, but I'm not going to even look at that until after the meeting. The outlook, inflationary concerns. Real quickly, when I hear the word inflation, I think, where do I see it most? Oil. My just so you know, Tim, just to let you know, because we have to do this every as a ritual. They said this morning, national average gas price, $3.08. What dream world are you guys living in? I'm seeing $4.50.
Wait, I know it's a boring news day, but a Californian talking about high gas prices and complaining.
Isn't that like a random day that ends in Y?
Yeah, like.
Oh, hey, yeah. Who cares about California? It's only the biggest population.
Yeah.
What do we got? 10 million people in my county. You got 3 million in all of Utah. You think that with that kind of population would be able to beat the Clippers?
Are we gonna do this again? We know it's Clippers Jazz week. We get it. We know it's California versus Utah week. We get it. Utah's far superior. Let's end the conversation.
Bro, you don't even have stoplights out there. When I hit a stoplight, it cost me $2.
I know. We still wave at each other.
Anyway, so you're feeling the inflation.
So really, Tim, on the markets.
Yeah.
Ditto everything Matt said. I'm looking at Wednesday. What happens on FOMC a lot of times, technically, on certain stocks, certain industries, and we'll look at that in a minute, or cyclical group of industries, is the market will kind of pause and flatten out and wait for that news because it's sector rotation built into it. What do we do based on the outlook on certain sectors? And what I'm seeing based on the newsletter, and I've done this last couple of weeks, cup and handles. I'm seeing cup and handles in the S&P, which is a bullish triangle. I've seen it in the Russell, seen it in the NASDAQ. The NASDAQ broke out of a cup and handles on a tear, but now it's hitting a double top. We're going to get into that. If you want to look at a decent cup and handle, inverted head and shoulders, we're going to call it, check out the Russell real quick. That's the small caps. I don't want to break too far away, but see how that broke out and now it's coming back to test it. We're getting close to resistance here, and there's a big cup and handle that pulled back on June 3rd, and that's the small caps. That's waking up of the growth companies. A lot of different industries in there, tons. And it's real interesting when we get in the sectors. Matt and I will break these down. It's real interesting what's going on here with small caps waking up and actually holding the market up. So I think it's going to be interesting based on the inflationary outlook on Wednesday. What sectors move after 2 o'clock Eastern? I want to see what sectors move on Wednesday and Thursday. That's my focus.
Well, it will be interesting actually, because depending on what they say about inflation, it may be those cyclical moves. We don't know that yet, but it'll be anticipating. Matt, you highlighted this Russell breakout last week on Monday's show. We actually talked about it quite a bit on the podcast as well when we were featuring breakout mechanics. And it's held that breakout zone. After the breakout, it's kind of rattled back and forth. We're still pushing towards 2336, which is that all-time high. If it consolidates for a while and then a breakout, I actually even like that a little bit more. But what about you, Matt? How are you reading the technicals here on small caps?
Well, and again, I think it's important to have a conversation over sectors and what is happening within sectors, because with the Russell breaking out last week and now it playing defense, it's support. And like I've said for a very long time in the halftime report, and Mark and I have talked about this openly as well, resistance is going to take care of itself as support holds. As long as the market continually plays defense and support is not violated, resistance will eventually get broken. And so I think you do got to look at the Russell 2000 in comparison to some of the other indexes right now, and you got to be impressed with what the Russell 2000 is doing. Yeah. Number one, technically, it did break out. We did officially call that a breakout. I think you have to once you achieved a no-sell day last Monday on the breakout of 2300. Where did it come into? The old resistance level. And I remember you asking me the question is, how much concern do you have at 2366? And I said, I have concern if the market has concern. And what I meant by that is basically if the S&P is going to still stay asleep, then obviously you got to be a little bit concerned with the previous level of resistance, because the market's not going to break out, and the Russell's not going to break out and just have everything else stay stagnant, unless you guys got a different take on that.
No.
Yeah, and that's interesting, because when you go back and forth between the Russell chart, Tim, and the Dow Jones, which is the major mega caps, right, versus the small caps, huge difference. I mean, definitely completely different group of stocks there when you look at it. So what's amazing is usually when the Dow pulls back like this, those are some big names in. That's the biggest, the 30 biggest companies. That's not bringing the market down. So there's a lot of strength and undercurrent in these small caps. And then you get into the big growth ones like the NDX. Do you have the NDX on there?
Mm-hmm.
That's definitely showing you the strength. That's the, look at that. That's definitely doing the exact opposite of the Dow. So you got the NDX and small caps holding the market up, a lot of strength there. So I think we're going to see something in cyclicals.
Sure. And I think this does warrant us to move right into the sector conversation, because what we're really highlighting here is the difference in sector performance and that second layer of the market as we go from index to sector. So Gino, you do the newsletter over the weekend, obviously at Tackle Trading each and every week. What are you seeing in the sectors? Because you mentioned cyclicals, which are a part of that Russell. And Matt, let's get your thoughts before we dive into that. But anything you want to add to that before we go into sectors, Matt?
Well, before we go into sectors from an index perspective, and yes, all of this index conversation does lead into the sector conversation, because what you're really kind of seeing right now is you're seeing a little bit of weakness right now, both technically and theme-based, from the strength of the market that has been the strength of the market for quite some time, and that is the industrial, and Tim, again, let me just put it out there, finish the sentence for me, right? As tied to the vaccine distribution, economy reopening up, everybody getting back out to work. We've been saying that collectively as a trading community for the better part of the last 6 months. You are seeing, not in the fundamental data, people are absolutely getting back out to work. We have right now over 9 million job openings right now that for people to go out there and get a job if they want. We are getting back out. So fundamentally, economically, geopolitically, all of those things are still true. But what happens in the market quite often is you will start to see rotation. And right now, what you are seeing is a little bit of rotation. You're seeing rotation come out of those areas of the market that were so strong. And I don't think that, and just because they're not strong today doesn't mean, oh my goodness, watch out, bears are coming. No, the anatomy of a bull market, according to Tyler Craig, what does he always say? One sector starts moving, the other sector starts stagnating. It's not like something aggressively gets slaughtered. And so when you're looking at the Dow Jones from an index perspective, yes, very similar to the industrial sector itself, the financial sector itself, the basic material sector itself. These sectors are tied to the Dow Jones. And so when you're talking about that industrial economy opening cyclical type movement, the Dow Jones is a leader there. And right now it's showing some technical weakness. You are seeing a double top, and which is nothing negative. You see double tops all the time. But what you don't see all the time is a violation of your moving averages, the market rolling over and violating short-term support. And so, yes, the backdrop of the trend on the weekly chart is still intact. You still see this as consolidation at the top end of the range. But when you're looking at this on a daily chart, you have to respect the violation of the 20-day moving average. You have to respect the violation of the 90 EMA. And now you're looking at it more in terms of a short-term neutral trend against the backdrop of an intermediate and primary uptrend, which would still put you into bullish territory. You just have a short-term view of this area of the market that it needs some time. It needs some time to develop, both from a theme and as well as from a technical perspective. How much time? I don't know. Nobody knows. We got to be able to read that chart. We got to be able to see, whether or not the 50-day moving average holds. We're going to see an important test here on the Dow Jones here today. You're going to see that throughout the week, especially with a very important Fed meeting on tap this Wednesday. And so you're seeing a little bit of technical weakness. You're seeing the market, at least those areas of the market, i.e. the industrial, finance, basic material areas of the market that were so strong for 6 consecutive months. You're just seeing a little bit of weakness in those areas of the market. They are turning over. And what you're seeing, however, is you're seeing money coming back into other sectors. What you are not seeing right now is selling across the board, which is still the sign of the anatomy of a bull market. You are not seeing selling across the board. You're not seeing increasing selling hardly anywhere. You're seeing you're in the middle of June. There's a low in the market. You're seeing a little bit of rotation from the top of the market to more defensive, safe, and what we would consider traditionally safer defensive areas of the market, like healthcare, like real estate, like even utilities. And so you're just seeing a little bit of rotation right now, but nothing too concerning in my opinion.
Yeah.
Right.
Gino, why don't you break those sectors down one at a time for us, if you can, and kind of talk a little bit about what we are seeing as a team. Obviously, we rank these sectors each and every week. And Matt, obviously, that's a part of what we do on our scouting report meetings on Friday. Gino, what are you seeing in the sectors? Where's the strength? Where's the hesitation? What are we, seeing from a shifting perspective as well?
Definitely. Before we jump into that, just to start off, then I want to finish with that, is we still have all the sectors in the bullish range. Just so you know, just because we downgrade something doesn't mean we're bearish. The overall trend, which has been amazing. I mean, it's been a long time. I mean, ever since the recovery and the bounce off the bottom of last year's COVID March bounce there, we've had almost every week, the sector's in bullish territory. So overall, don't forget the trend is still intact. So when we downgrade something, it's not that, okay, we're bearish. No, it's just the trend isn't as strong. That's how we're speaking right now. So just to remember that we're not going bearish on these downgrades, but keeping up with it day to day, like I do, and every week that we do on the newsletter, it kind of lets you know where to focus. Where are you going to buy into? You're going to buy into strength, right? If you're a trend follower, are you picking bottoms? You see something reversing. But what I want to do, Tim, is break it down into 3 groups: our cyclicals, our growth, and our defense sectors. That way we could see that rotation. That's what we're looking for. So we'll just continue with what we did, just an overall going into this week. We upgraded real estate, utilities, and healthcare. Just a little bump up. Now, when I say real estate, utilities, and healthcare, there's only one sector missing out of there. That's staples. It's still staying the same. We left that same. Those are your defensive sectors. So defensive sectors, meaning flight to safety. When you see money going there, it makes you wonder, where's it coming from? Are they taking it out of growth? Are they taking it out of big cap? Why is money shifting over? Because honestly, as a trader, those aren't your fun stocks to trade. They're dividends. They're the companies that that stay in business and keep their fundamentals up during a bad economy. They're real estate. This is the time of year for real estate. It's summer, interest rates are low. I get it. But do I really want to go jumping and put all my trading money in there? No, it's more investing, right? So looking at those, that's kind of like an internal warning. Healthcare is holding up. We're looking at XLV as one of the things we look at. I also look at the biotechs and pharmaceuticals and stuff. But healthcare, when you look at healthcare, Tim, you see the double top. That's important. That's important. So that is a very clear double top there.
Maybe even a triple top there, Matt. It had a little tail on that candle back.
Yeah, I mean, I call it a triple top because it's within the point, right? I mean, it matters if you're using a fine pen or a crayon, right? Or it's definitely resistance. If it breaks that 125.64, whatever you're looking at there, that's here. So I'm seeing a pullback to test the moving averages and like the 20-day, whatever. I want to see if this turns around this week because that'd be interesting for that sector of defensive. Then as you go down, we also upgraded real estate. Let's look at that real quick just to get that out of the way. Now, real estate was an upgrade because, well, look at it. Look at the trend. I mean, you don't want to chase this, but you don't need any technical indicators to tell you that thing's on fire, right? Is it overstretched? Is it overbought? It depends on what indicators you look at. But
answer is yes.
Look how hot that is. I mean, yeah, that now, honestly, there's a lot of diversity in that sector. You've got the cell towers, you've got REITs, you've got a lot of different dividend playing type hedge fund companies in there. Even it's a lot, very diverse. I think public storage is even in there. It's interesting, that is a sector that's on fire. Based on interest rates going forward, though, that's one that's very sensitive to that. So that is one of those defensive plays that is sensitive to the outside sources. Let's take a look at staples. We left that the same, and that sector is just kind of flat and boring, right? I don't know what you think. Is it possible?
Yeah, they got a little 5-point downgrade, I believe. Yeah, they're losing momentum up there at the top and kind of getting into a little bit of a consolidation range for sure.
Yeah, let me take a quick peek at the sectors technically that Gino is talking about. The ones that it's again what people would traditionally categorize more as defensive in capacity. You're talking about staples, healthcare, real estate, and utilities. He talked about the strength in real estate. And typically speaking, you're not going to really attach yourself to a growth environment in real estate, but that's exactly what is happening right now. You are seeing a momentum-based trend in real estate, and Gino mentioned the slight overextended. I would technically put this in the overextended scenarios, both from an indicator perspective as well as from a pure technical perspective. When you're looking at it from a pure momentum perspective, you look at it from what we would consider what is the potential average yield, or otherwise known as pay ranges. And when you're looking at it from momentum, you see a market go from 38 and change, we'll give it 38.20, all the way up to 40, we'll give it 43. So you're talking right around a $4.80 type price movement. Then it goes from 41 up to 45.80. Once again, you're talking right in that $4.80 type capacity. And so when you're looking at things from a yield perspective, the analogy I always give is, you're running a race, right? And if you're used to running a mile and you go out and run a mile and you try to run 1.5, you're going to get a little tired. Well, the market gets tired too, guys. It ran a mile here. It got a little tired. It consolidated. It ran the exact same mile. What are you starting to see? A little bit of consolidation. When you look at it from a pure price perspective, you are at the top end of your range. When you look at it from an indicator perspective, yeah, you are overextended. Your RSI is currently pinging right around the 86 level. You look at this, you look at real estate. Real estate doesn't do that. That's what technology does.
Yeah.
That's what comms do.
Yeah.
That's what discretionary does. That's what growth does. That's not typically what many people, myself included, would consider one of the more defensive areas of the market, and that is real estate. And real estate XLRE pays the second highest dividend in the market next to utilities. And so you're seeing some fairly decent rotation coming into real estate, coming into healthcare. So from a technical perspective, yeah, you are talking about the highest rated sector right now in real estate. It's deserved. And quite frankly, I'm very uneasy about putting something like real estate at a 15 handle, given the fact that real estate is traditionally very defensive and doesn't move like this technically from a growth perspective. But again, that's what we're seeing. So look for a little bit of consolidation in real estate. Look for that to reset those high base triggers. Look for that to let that 9 EMA catch up to it. But yes, I would consider this overextended, or it probably would have got a little bit of a better upgrade than that token 5-point upgrade. But again, technicals and being overextended, that does play a role in how we approach the sectors from a ranking perspective. You mentioned healthcare, and technically I would consider healthcare short-term neutral, intermediate bullish uptrend, right? Technically.
Yep.
But in the immediate short term, just looking at it the last week, I do think you're seeing some things technically in healthcare that you're not seeing in the rest of the market. The rest of the market kind of was asleep last week, quite frankly. Healthcare was not asleep last week. You found support. You found that 50-day moving average. Remember the Dow Jones testing that 50-day moving average? Well, healthcare found that 50-day moving average last week. It kissed off it. Broke out. Yeah, it was on the backs of some pretty important information coming out in the biotech sector. We saw Eli Lilly, Biogen go gangbusters last week, and we saw a little bit of weakness in some of those big mega cap type companies in healthcare. But you got to respect the price movement. And you saw it violate the 50-day moving average, hold on the 50-day moving average, violate the 20, maintain price aggressiveness above those moving averages. And then technically you get a little bit overextended. I mean, stop me if you've heard this before, tackle trading. What do we love to see before a breakout after it runs? We love to see it get in the cooker. We love flag base patterns coming into breakouts. We love high base patterns coming into breakouts. You got a little bit overextended, snapback retracement. Let's see this. This interests me from a sector perspective.
Yeah.
Let's see this test here at 124. We're starting to see it form up here in the sector a little bit at 124. You see the type of price movement late last week, gets into that resistance zone right north of 125, starts to consolidate. 124 is starting to form up a little bit right there. Coming back on the daily chart, is if you can get that nice little support level forming, all of a sudden you're running against a breakout from 124 instead of 121. And who doesn't love that type of technical analysis coming into a potential breakout? So healthcare did get that upgrade. It probably would have got a little bit more of an aggressive upgrade if it was not for the slightly overextended and the mixed data from an industrial perspective. But yeah, healthcare did get that upgraded. You are looking at a technical environment that could see an increasing in support, which would line up that breakout, that potential of that breakout a little bit better. And then you mentioned utilities and the slight upgrade in utilities. That was based on a couple factors. Number one, support holding here at 64.5 multiple different times horizontally. And then obviously you broke back up above those moving averages. And when you're looking at this from a pure technical perspective, I do think a little bit of interest in utilities makes some sense. Look at this trend line coming down. Look at the horizontal support level on utilities right there forming. That's the upgrade. That holding right there is the upgrade. That's the confirmation. You broke out of your trend line, put that on a weekly chart, and what do you see? You see that tight consolidation, good consistent trend line. Triangle gets violated last week. That's why the upgrade was in utilities. And then the last sector you spoke about from a defensive perspective was that of consumer staples. And consumer staples has been a fairly difficult sector to analyze, I would say, over the last 6 months. In fact, I think consumer staples has been probably the most difficult sector to get a good grasp on, a good philosophical viewpoint of where you see price going. I have a difficult time here. Staples has broken out multiple times in the last few couple months, has not seen any aggressive price movement on top of that. You're seeing a little bit of slowing momentum at the top of the chart. So on the backs of slowing momentum, on the backs of a felt breakout yet again, on the backs of it showing some weakness on its moving averages, had a little bit of a downgrade there in Staples, Tim. But the defensive areas of the market, what I like what's happening in utilities. I like that weekly chart in utilities. Staples, in my opinion, needs a little bit of time to shore up. Healthcare has an opportunity if 124 holds, and then real estate to me is the best of the bunch in the defensive areas. But you are overextended from a range up perspective. Typically speaking, momentum-based trends like we're seeing in real estate, they can be on fire and they can be fun trading environments. But again, the biggest thing you got to be is patient here. Let the technicals catch up to the momentum. And what do we love seeing in that environment? It's a very simple analysis for those new to us at tackle trading. Mark's girlfriend, we dubbed the 9 EMA Mark's girlfriend a long time ago. He loves the 9. He loves the 9. That 9 EMA, that pink line on the chart here, watch that catch up. As long as this consistent price action happens here in real estate, you're going to love the momentum as that 9 EMA catches up to it.
Mm-hmm. Love the breakdown on those areas of the market. No, I think Staples have been a terribly tough one to actually rank and get a feel for the strength of it, which is why it is where it is.
Well, it's defensive, but it's tied to consumers and growth. It's a difficult sector right now from not just a technical perspective, but underneath what drives that sector has been a little bit more difficult as well.
Gina, what about the other areas in the sectors, like the cyclical sectors, the other ones? What else are you seeing in sectors right now?
Yeah, so that was the defense ones, the real estate, staple, health, utilities. And real quick, I want to highlight one of Matt's points is real estate. That sector, myself especially, and Greg Holmes, we like to look in there for dividend players. There's a lot of good dividends in the real estate, and that's what I look for safety plays, moving my trading money to investing money. And it is dominated by the American Tower, Crown Castle, and those are actually, when I did the research last year, 5G companies, which is really tech. So don't think of just landlords and real estate managers and property managers and storages. There's technology there, but they pay dividend. So just a little highlight there that it's an interesting sector. It really is. But now looking at the cyclical sectors, I want you to think of materials, industrials, energy, and financials. Materials, industrials, energy, financials. Out of those four, we downgraded materials, industrials, and financials. So which one do you want to start with, Tim? Let's start with the alphabetical order, XLB, materials. This is now there's some good players in here, some great players. What I see in common with these technically, Tim, is the 50 EMA or 50 simple moving average, whatever your line is there. I'm pretty sure it's a 50, right? Because that looks
50
like
SMA.
Yeah, that looks like mine. So yeah, it must be the 50. Now, real quickly, look at financials and look at the 50. Look at that. It's heading towards the 52. See that? And industrials. It's the same chart, man. Look at that. There's the 50. Now, those three are all testing the 50. That is support. That's your weekly support. Still bullish. But notice how they all have pulled back like 6 out of the last 8 days. That is definitely a trend of money selling off, profit taking. I'm not going to call it bearish. I'm going to call it money coming out of. I'm not going to call it shorting. The cyclicals, right? Like Matt said, the money's coming out of there, going somewhere else. And most of the days on all three of those, of the four cyclical sectors, money's come out. And that's a very, very invested group of companies. That's your cyclical companies. Materials has been hot. Industrials are big names in there. Now, the oddball in there, Tim, of those is energy. Energy is not looking on the 50 there. If you look at XLE, there's a big difference there. Now, why is this? I think you're going to probably agree that a lot of it has to do with oil, right? Oil is the commodity back in energy. It is on a tear. It's commodity based. And it is breaking out. That's a breakout pattern coming back to test the support. Will that hold? I don't know. But that's all that I really need to say right there is the cyclical companies, they technically the three of the four look the same.
And industrials, materials, and financials have been getting settled downgrades over the last few weeks, Matt. Still in the bullish territory because of the intermediate and longer term trends. But the changing character in the short term charts is definitely apparent. Saw you go into the intraday chart, I believe, on the industrial sector or the materials.
All right. It's got a tight 30-minute trend line that's interesting to me. But when you're looking at these areas of the market, the cyclical areas of the market, the ones that have been the strength, both from a technical perspective, fundamental perspective, and quite frankly from a rotation perspective, all the way from the election until now, it's obviously showing a little bit of weakness right now. And weakness both from a technical perspective, but also weakness from a theme. It was last week that we basically said, we're not getting $1.9 trillion from an infrastructure perspective. It's not going to happen, right? And so it's losing a little bit of that, we're all going to be putting out all this money. We're going to have this amazing industrial type movement. And so it's shown a little bit of weakness. In fact, it was interesting to me that Biden's Build Back Better, his entire infrastructure agenda, that is not getting a lot of love here in the U.S. right now. But out of the G7, what they announced this past week, Build Back Better world-based. The G7 putting out their Build Back Better plan, a rival to the Chinese plan that's been going out there for the better part of the last 7, 8, 9 years, right? And now you're starting to tie vaccine distribution worldwide to that type of movement. And so it's going to be interesting in terms of this cyclical areas. Because again, I do think it's important from an industrial movement to have infrastructure really or at least a government plan for infrastructure to attach to this type of movement. How that movement to the geopolitical international stage, how that impacts here in the U.S., I think we're going to need some time on that one, quite frankly. The G7 had a lot of announcements. A lot of it is okay, but how are you going to do it? Where's the money going to come from? How are you going to enforce that? So the G7 had all these amazing plans they came out with, but the rest of us are like, okay, fantastic.
Right.
We're going to call it the Green Marshall Plan. Okay. I need to know more about that.
Sure.
Okay. So there's a little bit of weakness right now from a theme perspective as tied to these cyclical areas of the market. Technically, specifically in industrials, materials, and finance, technically you're showing some weakness as well. So from a theme perspective, you're showing a little bit of mixed data. From a fundamental perspective, I still believe the fundamentals are intact, but from a technical perspective, you were already showing weakness at the top of the charts with resistance holding. And that's not a bad thing. Not at all. That's not a bad thing. That happens all the time. But support got violated last week. That's the concern. And so up until this week, you were looking at this as a consolidation, continuation type pattern. With support getting violated, now testing the 50-day moving average, you're looking at the industrial type sector. You're looking at the basic material sector specifically, those two sectors. You're looking at them as short-term neutrality right now. And the difference is subtle, but it's also fairly important. When you're looking at a continuation pattern, everything is simply about the breakout. When you're lining up at high base, ascending triangle, symmetrical triangle, cup and handle, anytime you talk about those degree of continuation patterns, you are simply waiting on the breakout. That's all you're doing. It's a very simple, it's very easy analysis. It takes patience, and that's probably the most important skill set to have in that type of pattern is just the patience for the breakout to occur. And so when you were looking at basic materials, all you're seeing here is an ascending triangle with a horizontal resistance, and you're just saying, well, we're going to wait till 89 gets violated. That's all. Well, once support gets violated, you now look at this as neutrality. And so at this point, in a lot of the basic material spaces, and specifically industries, you're looking at support, major support tests, holding those major support tests, and then looking at more of reversal type analysis in the short term. And that type of philosophical difference is important because one is simply looking at the breakout and the other's looking at double bottom scenarios and looking at 200-day moving average bounces and looking at short-term reversals. And so you are seeing some weakness from a technical perspective. Our rankings do reflect that weakness in the short term. But once again, in our rankings, we always take into account multiple time frame analysis, daily charts versus weekly charts specifically, and we take into account pattern recognition. And right now, in the cyclical areas of the market, you're seeing weakness with resistance holding, weakness with supports getting violated, and now specifically with materials and specifically with industry, you're seeing major and very important test on those 50-day moving averages. Remember the importance of 50-day moving averages. They are intermediate support tests. Those intermediate support tests are very important to hold. And so I do think this week, with the Fed on tap, with what's happening from a geopolitical perspective, with the weakness we're seeing in the cyclical areas of the market, this week is a little bit more important of a week from a technical perspective, given the fact that some of these areas of the market that were very, very, very important to carrying the market over the last 6 months, they're finally showing some increasingly important support test.
Mm-hmm. Yeah. And out of all the cyclicals, Gino did mention that energy is kind of holding up a little bit better.
Well, energy's always its own little beast, right? Especially energy's taken a life of its own since we went zero prices. Would you guys agree with that?
Yep.
Yeah. When oil went zero prices, this sector became just its own unique sector, right? And so when you're looking at the energy space, obviously it's going to be tied to any cyclical type movement out there. We're talking about oil, energy. It's very prone to cyclical behaviors. When you're looking at it from a technical perspective, 55, it stands out to, I think, everybody here. 55 is the clean breakout channel. 55 is the consolidation of the and the test. 55 is right there with the 9 EMA. If it does not hold in the short term, you are seeing a fairly important test and perhaps a violation of it today. If it does not hold in the short term, I do not think that is too dire to the market, to this area of the market, because you got a backstop of a rising 20-day really, really tight there. And so even if 55 fails here, I'm still looking at that 20-day moving average. You see the support level that it formed over here. And if you do form a support level, and again, that backstop's important here. If you do form that support level over here, you're still looking at a nice trend line moving up. Yeah, you have some slowing momentum and trend, but you still have a nice trend line intact right where that 20-day moving average is, and you'll be looking at dip mechanics there. The same test in industrials is not the capacity. You felt the 50? I don't know. What, 6 more weeks till Groundhog Day?
Yeah. That's a not seeing his shadow moment. It would have to actually come back down and test the 100 zone, and you really would be in more of an intermediate zone of neutrality, not just short-term ones. So that's an important test.
And I really think that phrase intermediate zone of neutrality is where we're heading in these areas of the market. So.
Well, it looks, it feels, and I mean, everything is leading to that. What's going to be interesting, to me anyways, is energy holding.
Mm-hmm.
Yeah.
Finally, the Russell 2000 waking up and showing some love and showing some life above that 2,300 level. You see that right there? I think that's interesting. And so as long as you're seeing some, healthcare, seeing the strength in healthcare perhaps is interesting as well. You're not seeing massive selling.
Mm-hmm.
That's not what you're seeing. And that what you're seeing is weakness based on where do we go next in that areas. It's specifically to finance, industrials, and basic materials. That theme has been so strong for 6 straight months. But what's it been based on?
The reopening, trade, the anticipation, the vaccine
all of it good,
rollout,
all of it good, all of it good.
Mm-hmm.
But what was a big kicker on that theme? Biden's $1.9 trillion infrastructure plan.
Sure.
We're seeing weakness at the top, and we're seeing that struggle get through any traction. And so it is showing some weakness. We'll have to wait and see to see those support tests. But again, that's why you come to the halftime report every day, because we break that down in real time.
Yeah, that's fair. And then last couple areas of the market in the more aggressive areas, tech, discretionary, communications.
There we go.
What are you guys seeing there, Gino? What are you
Okay,
seeing?
so
Beautiful breakout potential.
There's the sectors I like to trade. The growth. These are the movers, big ATRs, average true range daily ones. These are the stocks, big names. Communication, tech, discretion. I mean, that's the three, right? Com, tech, and discretionary. I want to start with the two that are really bullish right now. Number one, let's start with technology. When you look at technology, hang on, there we go. You look at that pattern, it is a double top. I lost my numbers, but I'm looking at 143.5 roughly. Double top up there. We broke out of a cup and handle. The bottom of the handle, the part of the cup you hold, was again June 3rd, like everything else. That was the June 3rd doji on the moving averages. It broke out on the 4th. It's taking off, Tim. It's just taking off. I see resistance at 143.5, but that I want to see if that clears it or if it hits it. You know what I mean? Like that's where you have to decide, okay, if it doesn't break that, do I take profit? If it breaks that, I tighten my stop, That is the big names. Those are the market movers. Technology is one of the first things I look at because, I like to trade those. And when I look at technology, real quickly, you got to look at Apple and TSM. You just got to look at Apple. It's one of the most popular traded stocks in the world. Is it reversing trend? Is it finally going to trend? It's triggering today. It is triggering today on a double top and the 50 moving average. So those are two key indicators right there, double top and a moving average. That's
very quickly. Just so Mark and Tim know, Apple's going to be my pick for Queen's Court tomorrow. So I'm just throwing it out there today so you two don't steal it. Just throwing it out there.
All right, okay. Fair enough.
Okay, one more real quickly because Tim,
I already texted Emily that it was my pick in advance. So
I will check that tape.
And a very similar setup in the same sector, very popular stock, one of the biggest semiconductors in the world, TSM, Taiwan. Oh, you already got it. Wow, look at that. Same similar setup, but it's above the moving averages. It pulled back to the 20-day moving average. I actually like this one better, Matt. So don't tell if you make sure you decide if you want Apple or this one.
I'm going to take them both somehow.
I was just going to claim this one. All right.
Okay, so
basically this is Queen Court in advance now. This is a little segment.
No, this will get him floated. I mean, listen, you got to be careful with that. We'll see because the Queen's watching right now, so we'll see. But anyway, go ahead, Gino.
So again, on these growth sectors, technology, I don't want to go through all of them, guys, but there's a lot of good setups there. And it excites me when I see big names like this because they're very liquid. The options are good. They move. They're easy to. The technical reads on these don't trick you as much. Like you get your cup and handles pan out. Your double top breaks, they work more than the other ones. You know what I mean? They're the big names. They're watched heavily, very liquid. Now, moving on to the next growth sector, communications, XLC. Now, this one has a very similar pattern like the S&P here, where you're kind of the cup and handle. There's your June 3rd handle again on the 20 EMA. You got that doji on the 20 EMA. And it's triggering new highs today on communications. And I just have to, real quickly, you got to look at this. And if you guys want, ATVI, look at ATVI. Look at this setup here. This is a player in there, Activision, right? Look at that set. I don't know. I mean, that's a nice cup and handle, inverted head and shoulders. That's a lot of bullish stuff going on there, right? I like that trigger. I'm not going to tell you if I got triggered in today or not on that.
I'm assuming Gino did.
Sounds like I love Activision's pattern as well. It sounds like book talk though.
One more in there that's pulling that sector.
I'm fine with Gino's book talk today. I like Activision's breakout. Love the trend line. Love what's happening on both Taiwan Semiconductor and Apple.
Emily
both of them finally waking up.
Mm-hmm.
She said I could keep my head today for that one. Okay. And Facebook. Check out Facebook. FB. That's a big mover, right, of this communication group. But look, do you like that swing low there off the 10? Or is that Mark? We got Mark's girlfriend on there. So
I personally don't on Facebook, but then again on Facebook I typically don't like much.
I mean, this is
I do love the
interesting pattern.
$2,400 breakout on Google though, and I think both of them are going to play together.
Mhm.
Yeah, oh, you're right. You're right. Goog or Google? Which one do you use?
Either one.
L.
L's a little bit better.
Trade, do you sit there and go, which one am I going to trade? I mean, it's like, don't want to type in that extra letter. Right. So looking at that, yeah, Google's the lead. It's got a lot of strength there. But those are two big players in there. That's all the big players. Yeah. Now, sector two, there's one more sector in there. That's the growth sector. That's a little bit different. It's not participating like those guys. Discretionary. XLY. XLY, which is also the last of the alphabet of the XLs, right? Kind of lagging. You can tell there. It's still below the 50. The 10 and 20 or your 10 and 9, just flat, right? This is one of those bad patterns where you're just like, yeah, there's better setups out there. You can tell it's not near highs. And looking at that, yeah, this is where Matt and I have to put our heads together and go, wait a minute. If money's in the strength of these discretionary growth stocks, why isn't it not panning out in the discretionary? Why is it in?
It's the consumer, guys. Mm-hmm. Sectors tied to consumers are really difficult from an analysis perspective. I do think the chart gets a little bit cleaner though once, and Tim, I love my numbers, once 173.70 is achieved. Once you get above that level, you're back above the previous support levels, you're back above the previous resistance levels, and you're back above the moving averages. And so, from the growth areas of the market, again, the growth areas of the market as tied to this would be comms, discretionary, and technology. I think discretionary does get easier once resistance in the 50-day moving average is achieved. I think at that point you can look at this sector and say, yeah, let's work on those watch lists right now. Let's find our 3 to 5 best discretionary plays. And if this number 173.70 is achieved and it reclaims that 50-day moving average, you have a list of 3 to 5 stocks that you can go to be like, boom, I love these technicals on the breakout. Let's apply that methodology there. Pretty simple analysis, quite frankly.
And also, real quickly, Matt, when you start off saying something, I'm going to try to break it down a little easier in layman's terms, is when I get students right now, there's a lot of people jumping in the market brand new here in tackle trading. And for some reason, based on the economic state, the economic recovery, things are opening back up. You start to think of, I should invest in areas where I'm going to really spend money. And guess what? The malls are open, right? The malls are open. If you have high school kids like me, that, hey, the mall's open, the theaters, discretionary spending is what they're doing. Everybody wants a discretionary spend in restaurants and malls. And you would think that's where you would see the strength in the market, right? You would think this has got to be the best sector. So I see the amateur person or the person that's not trading or investing or looking at sectors every day going, what company do you like best? Do you like Nike? Do you like Starbucks? Do you like AMC? And AMC is kind of like throwing everybody off with that whole Reddit thing. So you would think the discretionary is on fire, but when you look at discretionary, you have to look at what makes up of this sector, and it's Amazon, right? When you look at Amazon, Amazon's doing fine. Amazon's doing good today. Amazon's a big mover in here. So you're like, well, wait a minute. Why isn't this sector not doing good? Well, when you break it down, it is confusing. But you just got to look at things like Home Depot. Look at Home Depot. That does not look good.
Let's bring Matt back in here for a second.
Very quickly, since we're trying to make things simple for the consumer, let me make it extremely simple. Consumers who were not participating in the market last year, you got some free money. You spent the free money. You don't have it this year. You're not spending the money. That's about as simple as we can make it. Discretionary is a very difficult sector from a fundamental perspective to assess. Technically, it gets easier above resistance. Technically. But even at that, you like that better than what you're seeing in Apple today?
Or communications in general.
Or Taiwan Semiconductor today?
No.
Right.
Or Activision today?
Good point.
And when you're looking at from a pure technical perspective in the marketplace, Technology, discretionary does get cleaner above the 50-day moving average. Technology sector, XLK, you got to love the price movement you're seeing over the last week, but you're going to get concerned with resistance.
Mm-hmm.
And you're going to get concerned with resistance fairly quickly, in my opinion. What doesn't have resistance? Comps. Look at that $80 trigger.
Mm-hmm.
Is there a cleaner trigger in the sectors
That's a nice bullish triangle
today?
trigger.
No, it's beautiful trigger.
There's not a cleaner trigger.
No.
Which could certainly break and certainly see some love in the communication space. I think the tightest trigger in the market from a sector perspective is comps this week.
Mm-hmm.
Yeah, but honestly, what I was going to say about discretionary is that's what we call a trader's market. That's a trader's sector. You got to make sure you're in the right stocks. Technically, you can't just go, well, I think those companies will do good. You have to be technical to make investments right now. You have to be going,
Sure.
okay, where are those triggers? Like Matt's saying, look for the best triggers, not the best ideas.
Yeah.
Discretionary for me has just been a very difficult sector to trade, to invest, to analyze, and I think it's going to continue to be so.
It's been that way for most of the year.
But I'm seeing a lot of bearish triggers on big names in there, and it doesn't make sense. It doesn't make sense because you're like, wow, those stores are filling up, right?
Yeah.
Like Home Depot, Lowe's, and Starbucks, and Nikes, and you're like, why are all those giving me bearish triggers? Well, they've ran up, and like we said before, there is a shift to flights of safety, better investing type stocks, because who knows how long that's going to last. But they've already ran up.
Yeah.
So that brings us to our last one, guys. I think stay tuned. Stay tuned. I think we need to break this down again after the FOMC meeting.
Appreciate it, Gino. Any other thoughts on the sectors, Matt, that you had? Let's move into commodities. Let's roll. Let's move right into the commodities sector. And we're going to save our gold analysis actually for last because Coach Mark wants to highlight gold in the commodity corner this week. He's seeing some things in that pullback he wanted to kind of discuss with the team out there. Start with crude oil. You guys mentioned energy holding up very, very well. Crude just continues its juggernaut run over the last little bit. Just really, really playing defense on that 9 EMA. This one is riding the lightning. We're up above $70 a barrel. It's been very, very strong. Overextended in that regard. Matt, anything in that chart you want to highlight?
No, it's in fade up mode.
It is. Yeah.
It's in fade up mode.
And
There's no fade up mode isn't a great active trading environment. We need to get it some triggers that are cleaner.
I agree. Bitcoin next.
But as long as it is in fade up mode, you still got to like energy plays.
Mm-hmm.
I love energy plays.
Mm-hmm.
Bitcoin next, if we can, a recovery a little bit off of the bottoms here. The chart's still very much not out of the woods in many, many regards, but it does have a little bit of a change in character over the weekend. We had some positive chatter around a couple of different headlines, quite frankly, that don't actually impact Bitcoin markets long-term or probably even short-term. Paul Tudor Jones liked Bitcoin. Okay, we've known that for the better part of a decade. Elon Musk is flip-flopping. Okay, we've known that. Anybody who follows his Twitter.
Did he flip-flop?
Well,
he flopped.
Did he just flop?
Did we? Because I'm not sure there was a flip.
Listen, I'm gonna make a bold prediction. I don't think Elon. My read of this situation, I actually spent way too much time this weekend thinking about it. I don't think he's gonna flip flop again for a while. Eventually, yeah, right.
My read on what he did over the weekend, and just to quickly give the news. Elon stated over the weekend, and what is really kind of leading to some of this price appreciation coming into today, is he stated that Tesla would be willing to start accepting Bitcoin again. The disclaimer, the bullet point reading, right? What did the disclaimer say, Tim?
If and when Bitcoin miners can make like substantial progress in their footprint and all this kind of stuff. Yeah.
All right. So we will. Once certain metrics are achieved, correct?
If this, then that, right? Yeah.
Does anybody have a general, universally accepted standard on the environmental impact towards crypto mining?
No.
So when he says when Bitcoin miners achieve 50% environmental, does anybody know what that technically means?
No. Even the miners, they're
So
trying to come up with some kind of
my
stuff.
reading on Elon over the week is there was no flip because he's not actually going to do it. He just flopped because he's trying to appease some of the haters
No,
online that have been
exactly,
hitting
and
him.
that's what I mean by flop. And I think we're not going to hear from Elon on Bitcoin for a bit,
Yeah.
now, whatever that is, because it felt like a political statement.
It did to me too.
Carefully crafted political statement to say, "Hey, I don't hate Bitcoin, but we're not." I mean, it seemed like, how do
You
I
might as
please
well have got
everybody?
a lawyer up there giving the
That's what it felt
assessment
like.
with disclaimers.
So I think Elon out of Bitcoin for a while would be a good thing.
You know, there was actually one story around Bitcoin.
out of Bitcoin, he'll still talk about it.
He'll talk about it, and I don't like it.
We're talking about Tesla actually accepting payment. He'll
Matt,
talk about it.
You know me, and you know my perspective on this. It just triggers me, even that Elon is catching all of these headlines over and over and over and over again. And maybe that's my emotion about it right now. I'm just tired of him talking about it. I really am just so tired.
Because it has nothing to do with actual Bitcoin.
No, it doesn't. And there was actually a news story over the weekend that could impact the fundamentals of Bitcoin. The Bitcoin Mining Association, whatever that is, some of the biggest miners in the world, they announced that in November, they're going to start building blockchain technology. They're making a transition to the way that they recognize signatures. And I'm not going to go full nerd on this, Matt, but this actually is a big deal compared to all the other stories, which are not a big deal. If you could build blockchain on Bitcoin the way that Ethereum smart contracts are, it adds viability to Bitcoin that is.
And I'm not smart enough to understand what you just said, but I am experienced enough to know that matters far more to the market than Elon doing his best political maneuvering here.
1,000%. It's so much more important for the tech side of it, for fintech companies to be able to get those contracts on the Bitcoin platform. Yeah. It's a big deal potentially. Now, it doesn't happen until November, and it's not on Twitter, and it doesn't have little memes and Dogecoin and images and stuff. So it's not catching the attention of the short-term participants.
You better watch yourself. You're getting a little old there fast.
In 2021 it means it didn't matter, right?
Listen,
right.
I was with you until you started ripping on memes. I'm like, I kind of like memes.
I love memes.
Get off my lawn.
Yeah.
Let's go. Chart-wise, though, guys,
isn't it fascinating? I mean, this is a generational shift where old men are talking about young people talking about Bitcoin, right? Like Tim was just old man to Bitcoin. I know, but Tim, just the old man to Bitcoin. Us when we were, back in the day with Bitcoin,
Tim's not old though. He just acted old there. Obviously, there's always going to be news pertaining to Bitcoin, and people are going to want to attach themselves to certain storylines, and that does frustrate traditional investors, traditional traders who like to make their decisions based on, actual metrics, math, numbers, stuff like that, right? Mm-hmm. And so, yeah, I do think it gets a little old when we have to talk about the same storyline constantly that we know is a non-story as traders, right? And so I think that's where that frustration that Elon tries to attach himself to a storyline so much that he loses the vision of what Tesla really is. And Tesla is not a secondary financial instrument to attach yourself to a cryptocurrency. That's not what Tesla has ever been, but is what Tesla has become over the course of the last, really since February, since he started accepting Bitcoin in the first place. We've talked more about Tesla and Elon regarding cryptocurrency, and it's not even close. Then we're talking about SpaceX, rocket fuel. Then we're talking about Tesla itself, and so I do think that is a little bit old hat. Mm-hmm. With Elon, and that's just what I think a little bit of the frustration is with Elon and his weird attachment to the crypto phase, right? I don't want to say attachment, love affair, right? I love it, I don't. I love it, I don't. I love it, I don't. I'm the Doji King, I'm not. Like, it's just like, have some conviction, right? Mm-hmm. Have some conviction. And so that's all that is. But from a technical perspective, you are looking at a scenario where you are violating some fairly important intraday resistance levels. Let's take a look at this from an hourly chart perspective. You saw the consolidation here. We saw the violation of intradays last week, but what we never saw was a double bottom and a violation of 30,000. So 30,000, which was the horizontal number all of us have been looking at, the significant number all of us have been looking at, was not violated last week. So you do have a double bottom scenario from an intraday perspective that does coincide with the daily chart, which also coincides with the weekly support level right there at 30,000. You're only seeing the number here on the intraday. Come back out to the daily chart, you see the significance of that 30,000 handle over here. Come to the weekly chart, once again you see the significance of the 30,000 handle over here. You see that intraday analysis we did, that double bottom confirms that 30,000. The 50 weekly is catching up over time. Now from a resistance perspective, let's take a look at the violations here. First of all, you reclaim 38,000 and now you're fighting up against 40,000 here. I do think in the short term, you are looking at a scenario where the bulls do have a little bit of control here. You're finding, and again, gap up on the overnight weekend action, didn't violate intraday support. Coming into the cash open here today, market participants love it. Break it above 40K, sets a higher level of resistance, which coincides with the resistance over here in the downward movement in price. And now intraday, look at that little candle there right at 40K. And so I do think the intraday analysis is leading to price appreciation in the short term. Where could that go? Well, obviously, we're all looking at 45 to 47K, that range. In the short term, that's the most likely destination. If we claim 41K, is to get into the 45 to 47K perspective from a technical read. And that also would give it time for the 50-day moving average to come down into that range as well.
Marky, anything you want to add to Bitcoin analysis?
No,
here?
I mean, no, I mean, I was hoping, the only thing I'd like to add is just complaining that I was hoping that this little consolidation pattern would last a few more weeks so I could get a signal that, but you know, you get what you get, right? You get what you get. I'm happy with the price movement, happy with the plays I have in the area. I just, am I ever going to get that really, really deep discount? I don't know. I like the technical chart and I like the phrase bulls in control because that's certainly the way it feels right now.
In the short term, it's
the answer will be yes, you will. Bitcoin has a rich history of pullbacks.
Yeah.
So yeah, well, you just never know where that's going to be, right? You never want to be the trader that says I have to have only this. Right, you got to be able to read that price, and 30,000 holding in the short term, at least in the short term, positive for price appreciation.
Yep.
The dollar next, then we'll talk gold. Dollar's going to be pretty quick here today. It's obviously found a little bit of support over the last week or so, Matt, as it's trying to hold down there. Bounced up a little bit, changed a little bit in the trend. Obviously, we've got economic data this week, the Fed meeting. There's a couple other things, the PPI report, some Fed manufacturing numbers on Thursday as well. What are you seeing in the chart on the dollar besides just a support test over the last couple of weeks?
The exact same support test, major support test that we've been having for the last 4 months.
All right. Last one then. Let's move right into gold. And this is going to be our commodity corner here for our Monday show. And by the way, if you're out there watching the show right now, appreciate you guys as always. Hashtag Team Tackle in the chat. If you've not yet done it, give me a thumbs up on the YouTube channel. And if you're brand new to the channel, subscribe, click the bell so you get alerted whenever we do go live. Marky, you wanted to highlight commodity corner here today. And obviously we've had a very interesting condition in gold over the last 4 or 5 months as this trend is kind of reversed and developed. A couple of days in a row now, we've seen red candles and a really long lower tail fighting off of that 200, almost ticked it right to the penny there on today's candlestick action. Mark, what are you seeing in gold, and what did you want to bring this one to the commodity corner for?
Well, I mean, obviously,
what is your
gold,
focus on it?
I mean, I love gold, I love oil, I love trading commodities in general, and with the violation of the trend line, Matt, this trend line, from a technical perspective, what does that mean to you? Because when I look at gold from certain aspects, I'm not concerned today at all about the price action, but that's also a result of the style of trading I do. Aggressive cash flow, cost average down on the stuff I love, particularly commodities. And I'm also used to, in commodities, 3-4 week run-ups, taking a break. That's normal in the world of commodities. But I always take notice of technical violations. support number one, but then other forms of support, moving averages, trend lines, and I always take note of them because you want to get ahead in all of the decisions you make in an area on a stock or whether it's a commodity. And so, Matt, when you see this violation of this trend line, I mean, what does it say to you?
Maddie?
Sorry about that. Mark, that's a great question. I think it says two things to me. Number one, it confirms the short-term neutrality on gold. That's what it confirms. Up until this point, gold was holding that trend line, and so you were still looking at a slightly bullish uptrend, both from a daily as well as a weekly perspective. What this does do is confirm short-term neutrality for gold, which will always lead to more time before you start looking at it from a pure directional perspective. And so you're looking at short-term neutrality on gold, number one. The second thing it does always lead me to look at is those charts that are tied to gold and whether or not they are still intact or not. And so when you're looking at, obviously, what I'd be talking about is GDX and the miners out there. You see this scenario here where support at 38 is holding, and you're still looking at that as, I would love to see a breakout of 39. I would love to see that finally break out of 40, start to show some offense here, but that's not what we saw. We saw it hold. Today's violation also violates GDX, which now leads to more of a, okay, we need that weekly chart now to shore up. We need a little bit more time on that. I still love the weekly chart, but unlike triggering here last week, now you're looking at resetting those triggers. I still like the weekly chart, but it needs a little bit more time. And then when you break it down from a stock perspective, so you look at gold, you look at GDX, and you still like GDX, gold's going to take a little bit of time though. And so now I want to look at some of those leaders in the gold area to see their charts. And the number one stock out there for the better part of the last year or so in the gold miners community has been Newmont Mining, a fundamental darling. You look at this on the daily chart, and what you see is a violation very similar to GDX. You see it trying to find that zone of support. Obviously, a little bit of mixed data here coming back down to GDX. You see that very similar type price movement here, right? You see the violation there. And so on the daily chart with these support levels getting violated, you are looking at more short-term neutrality, if not short-term, slightly bearish in the mining community, and those simply need a little bit of time to really shore up, which means my second point is gold analysis will live here on that weekly chart. You look at GDX, you still love it from a weekly perspective. You look at the materials, you're going to see a little bit of weakness. You look at gold / GC, you see a little bit of that technical weakness here. And so, yeah, you're seeing a little bit of technical weakness in the daily charts, but the weekly charts, the longer term charts, as long as you hold here, and that 50-day right there, you see that 1850 horizontal, you see that coincides right there with that 200 daily as well. We're talking major support at 1850.
Mm-hmm. Marky?
Yeah. No, because once again, and it's like I didn't know we were going to talk about gold or not, because once again, we have each of us. When I say we, each of us individuals, not just in tackle trading, but we all have different trading styles, right? And some of us are more aggressive on cash flow. Some of us don't cash flow at all. And so and I guess I'm just so used to commodities after good runs trading sideways that it doesn't signify weakness in the big move of it. I mean, it's normal. I mean, price movement strong directionally is the exception. It's not the norm in the world of commodities. And so taking breathers, I talk about this in the commodity reports with copper all the time. Look back at the last 15 years, whenever copper's had good 3-4 weeks, takes a break like clockwork. So that's very normal in the world of commodities. But I do know that for certain styles of trading, technical weakness can impact the trade, especially if it's option trades with a short time frame. Obviously investors of gold don't give two squats about the violation of a trend line. Cash flow traders like myself who tend to lean on the aggressive side, I don't care about that at all. But I do know some individuals who might be directionally inclined, who might have, these violations. They're not small things. And what was the phrase you used, Matt? Confirm neutrality. Like, was that the exact way you phrased it? There's been several things on the Today Show that I've liked just the way they were said, because I thought they were spot on in describing it. And so, we could be looking at some neutral conditions on gold for a bit. Wouldn't it be unhealthy in a longer term move? Wouldn't it be unhealthy at all?
Yeah. I think the weekly chart paints the best picture for me personally. I appreciate that multiple time frame analysis, Matt. Any last thoughts on gold here?
No, from a directional perspective, we haven't talked about updating new triggers. We've been talking about how it needs some time, and honestly, when a directional trader like me, because I would put myself more as a directional trader than a cash flow trader like Mark, when a directional trader is not looking at an instrument for a directional perspective, there's a reason for that. And that reason is typically the reason why cash flow traders like Mark love those environments, because again, what's the entire analysis? Once the pattern is violated, what does it need? More than anything else, what does it need?
Time.
It needs time. And so for those time-based traders who love selling options like cash flow strategies, like covered calls, naked puts, boomerang trades, those types of cash flow strategies that people like Mark or the Queen, Coach M, love, those are fantastic for these types of environments. Now, for the directional traders, the daily charts, these things are going to take time. The weekly chart, especially on GDX, daily looks garbage. It might take a little bit of time. Again, that's not a bad thing. That's a really good thing for the cash flow traders. But on that weekly chart, you tell me that doesn't look good?
It's gorgeous pullback.
It looks gorgeous.
Yeah.
A good pullback. And so dailies get violated. It kind of destroys that pattern. That's when you switch to the weekly and you say, okay, now we live on the weekly chart in gold until support is violated. Then you just stop looking at it.
No, and from a cash flow perspective, the number one thing I care about is stability, right? Having the bottom fall out of things, that can, it requires at a minimum trade management, aggressive trade management. So the number one thing I always care about is cash flow is stability. And when I was doing my, morning routine through thing, I didn't worry about stability in gold at all. Now things can change, right? We adapt. But, I didn't have any of those concerns as far as stability in price movement of gold. Just, I like that confirmed neutrality statement.
Glad you guys highlighted the technicals here and kind of the way that you're approaching it. All right, guys, that's it. There's not much in terms of stock news. There was an interesting story I had just kind of as we wrap up the show, just from Microsoft. I don't know if you saw this one, Matt. Microsoft, obviously, they are the juggernaut in the market across so many different platforms, brands, things that they do. Obviously, their office products and their interface products, their operating systems are big. But their gaming segment has also been a very big part of their company and growing for quite a long time. They announced they're going to be moving their Xbox, streaming subscription type service to basically where you do not need the $500 console and you just have to have a gaming pad controller. Is going to be through the cloud. As long as you pay the $10-15 a month, you're going to have access to a lot of different titles. It's going to be interesting to watch how that goes. Could be a move in the gaming sector. We see so many companies just do online downloads and all that kind of stuff. Just kind of caught my attention there from a gaming perspective, because that sector and those industries have been so hot for a long time. Microsoft moving towards more of a cloud-based system with their Xbox out this year. Any thoughts on that one, Matty, at all? I mean, I know you're a gamer, but
I love gaming. There's no doubt about that. But I got Microsoft fairly similar to how I bring the NASDAQ in general.
Yeah. That Apple chart and those Taiwan semiconductor charts are looking saucy today, though. All right. Let's get some final thoughts. Let's wrap this one up here on a Monday, guys. And out there, Team Tackle, helping you get prepared for the week, breaking down the sectors. Gino, Matt, appreciate all of that analysis here today. Mark, final thoughts for the team out there.
Lots of programming today. Got a podcast coming out this afternoon. If you are a new student and want to see what tackle trading is all about, or maybe you're a recent pro and you don't know about all the features, Coach Frank does an A+. Trade Masters winner, Coach Frank, does an A+ job of breaking down all of the features every week on the weekly onboarding session we have right here on the YouTube channel at 7 p.m. Eastern. And then we have Tackle 25 Mastermind Group tonight. Coach Greg Holmes will be teaching that. That starts at 8:30 Eastern tonight. Find that on the events calendar at tackletrading.com.
Fantastic, Marky. Appreciate all the programming notes. And Matt, final thoughts from you, sir.
Obviously Monday, once we get done with the halftime report, you and I and Mark, we start thinking about that podcast real quickly. And I'm excited to bring on a few of the coaches from Tackle Trading on the Trading Justice podcast this week. We're going to have Coach Tyler Craig, Emily. We're going to have an amazing time on the Trading Justice podcast. So definitely check out the podcast. Going to have some important announcement there on the podcast here today as well. So pro members, get excited. We got some things coming out for you guys really soon that we're going to talk about on the podcast here today. So I'm sure we'll talk about it tomorrow on the halftime report as well. But get excited for that, guys. Check out the podcast from Trading Justice later on today, presented by obviously our partners in Tackle Trading.
Absolutely. All right, guys, Team Tackle out there, we're done for today. If you've not yet done it, obviously that thumbs up helps the analytics, gets the word out for our community here. And if you're new to the channel, subscribe and click that bell so you can get alerted each and every day we go live. And if you do want to join the pro membership at Tackle Trading, review all of our weekend reports, get our webinar content, our educational content, our premium blogs, there's a link in the description of every one of our YouTube videos to that 15-day trial. Click it, come and join us on the back end. I know that you're going to love it and get a lot of value out of it as a student of markets. All right, guys, we'll see everybody